Good morning, everybody. Good morning, Mark. How are you today? 10% for the big guy.
Who's that?
That would be Joe Biden. You didn't see last night he got his check?
What's that?
You didn't see the yarn get stretched and brought back around to him last night with the 10% for the big guy with his $40,000 check?
No.
Yeah, they got it. They got him all lined together now. It's all connected. Boom, 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 boom.
Well, dude, they want to get rid of him. His own party's turned on him because they know. They know he's unelectable, especially now with R.F. Kennedy Jr. being an independent, and they'll probably want to push him out so they have enough time to replace him with a viable candidate. Or he's never going to say I'm going to resign. He's never going to do what was right for the good of his party. So it's just another thing to worry about in addition to what's going on in the Middle East. But speaking of things to worry about, there's some pretty interesting stuff. Now, you guys know I don't really pay too much attention to people, experts. But this is a dude I pay attention to. His name is Jeff Gunlatch. He's the CEO of a place called Double Line Capital. And basically, he was just pointing out some interesting factoids about how screwed up we are, or about how, I hate to swear, but how effed our future is. Just talking about the debt. And he said I think in 2 years, half of tax revenues are going to be going to service the debt. Yeah. So basically, it's just on a unsustainable path. And just think about it. You don't need to be like some master Nobel Prize winning economist. At some point, the economy is either going to have to go into this tremendous, probably like greatest boom in the history of mankind to raise enough tax revenue, or at some point we're going to have to default or come up with something. It's not unprecedented. If you go back to I know it's not like yesterday, but the revolution, there was so much inflation that the government, one of the first things the government did when it was founded was basically gave everyone 1/40th on the dollar. So, you got they reduced the currency by 1/4. So say you had a $20 bill, well, now it was worth 1/40th of whatever that was, and you got it replaced with, what would that be, like a 50-cent piece?
Yeah.
So, but it can't go on forever because it just can't. You guys, I don't need to explain this. You keep inflating debt and debt and debt. Someone's going to get screwed, and it's either the borrower or the lendee. But anyway, so this guy is pretty, he's obviously more than pretty smart. He's extremely smart. So it was kind of interesting hearing. Let's see we have a massive interest expense problem that is going to, I believe, the next financial crisis. So at some point, someone is going to have to come along who's some kind of like brilliant genius that's going to have to come up with some kind of solution. A guy I used to work with used to say, hey, you know what? So we say, all right, well, guess what, guys? We owe you $1 million. We're going to pay you back 800,000. Take it or leave it. Like, what are you going to do? But now the U.S. isn't even the highest rated government in the world. In terms of there's we're AA now, and there's a whole bunch of ones that are AAA.
Well, and we don't even carry the same amount of gold and currency. So there's countries that have a lot more gold than we do too.
Yeah, and then this is an interesting thing here too, because you guys, I always talk about how this is not only probably the worst president we've ever had, it's the worst other people we've ever had. Now, Stanley Druckenmiller, no joke, okay, one of the huge hedge fund managers. Basically, he is saying this: back when interest rates were like near zero, when common sense, normal people were refinancing things, why was Janet Yellen issuing bonds at 15 basis points when she could have been issued a 2-year bonds at 15? Now, people that need to buy bonds are going to buy bonds, right? It's just there are institutions that get money, or people get money, and they're going to buy bonds. So she could have lent this stuff out at a longer term at a much higher rate, which means that we would be getting paid more money, right? It's just a better borrowing bank. And I mean, for him to say this, I literally think if you go back to Alexander Hamilton, it's the biggest blunder in the history of the Treasury. I mean, that's not a small.
That's a huge statement.
Yeah, exactly. Basically, because that's when the Treasury started.
Right.
He's saying this is the worst mistake in the history of the Treasury. So let's see. I guess because of political myopia or whatever. So that's kind of a bold statement. Was
Yep.
in 2 years at 15 basis points when she could have issued 10 years at 70 basis points or 30 years at 180 basis points. So that will give us much more time to put the money together. But then again, I always have to bring this up. This is the woman that bows to
Oh yeah.
the Chinese leader. Okay. Look at how this one comes out to kind of save her. All right. I mean, this isn't even funny, dude, because you know what? People don't bow in China. Bowing is a Japanese and a Korean custom. It's not a China custom. So it's like she doesn't even know where the hell she is.
Yeah, I know. It's sad to watch.
It's like, what? I mean,
And then this seeing her on TV saying we can afford 2 wars, it's not a big problem. We can always absorb this. They're talking about us, the American taxpayer that has to absorb this. Those people aren't paying the tax, and they get such benefit that the little bit of tax that they do pay doesn't even count. So I mean, I don't know. It's getting to the point where people are going to get disgruntled, and it's going to get ugly.
oh, I think people are
Well,
disgruntled.
people are already disgruntled, but I mean, you know,
I mean, a pretty important thing to keep in mind. I mean, I know you guys aren't up here in New York, but I mean, New York is about as left wing as it gets, right? I mean, in the Civil War, the New York City was on the side of the South. You know,
right.
I mean, people don't realize that, um, but yeah. So anyway, there was a poll that head to head, Joe Biden was ahead of Trump by 5 or 7 points. I mean, dude, 2 years ago he was ahead by 50 points. I mean, that's just unbelievable.
Yeah, but
But
Mark, he's
you know what?
trashed the whole country, and those people would still vote for him. Think about that. Their house is on fire, but the guy that's turned off the water is the one they want to vote for. It doesn't make any sense.
Well, that's why they call them the low information voter. But
God.
what's going on now, though, is there's things that people can see in New York. There's these tent cities. I mean, I was there on Friday night, and dude, it was pathetic. I mean, this sounds like a really stupid thing to say, but it's the only thing that these people that there's going for it is that the whatever drug these people are on is knocking them out, and there's people
Oh,
passed out everywhere. It's not the crack epidemic 30 years ago where people, homeless people were all jacked up and would get in your face and everything.
well, did you hear President Trump come out the other day and say that he could fix this problem? And he did. He said we're going to open back up the asylums, and we're going to round up the people that are homeless on the street and give them a place to live, start them off, get them started, and then these people that are addicts, we're going to put them in places that can get them dried out, and the people that are crazy, they're going to go to asylums. We're going to open up insane asylums again and start taking care of these people that need it, and that's what we've been needing for the last 40 years.
Yeah, it's true. I mean, they should obviously change the names
Right.
from insane asylum. But yeah, I mean, these people need help. I feel bad about it. I'm not it's how is someone who is mentally ill letting them go live in their own filth on the street, giving them any, maybe that same person, if they were on the right medication and had some counseling and therapy, could end up being okay. I mean, it's just well, anyway, before I get into the markets, I'll just give you one more little factoid or thing that, just how stupid some of these friggin' ultra liberals are. Right. So I was at a Dead show one time and, hanging out with my boys and whatever. And we see this really sleazy, clearly junky dude like walking up and down in between the cars. And it was obvious he was like looking around, and he was checking car doors to see if they were open. It's this huge parking lot outside the concert. And he's like going in people's cars to see stuff. So two of my friends go and they kind of grab the guy and not, grab him. And another one of my friends goes to like look for a cop. And all these stupid, Grateful Dead hippies are like, "Oh, come on, brother, let him go. Oh, he's not doing anything wrong." It's like, he's trying to steal from people's cars, And they're just, "Oh, come on, brother," blah, blah, blah. Anyway. All right. Anyway, market's acting strong, surprisingly strong, but I think it really just comes right all back to the to interest rates. So let's see. I don't think the bond market's open yet, but we talk about our important things to watch. So 4.79. I mean, you can almost say that this support has been broken. Now, well, I mean, it's not really support because it's an interest rate, but
Right.
yeah, this very clear level has been broken. So who knows? Maybe this bond sell-off is over, at least for now. And a good place to get exposure to that would be to buy one of these simple bond ETFs, right? I mean, if the question is this on the verge of a breakout? And I mean, it does look bullish. You got to remember the scale here. You're not going to get a huge return, which is, even a big move in the bond market is not, from a percentage basis, generally isn't that big. I mean, this is unusual to be down 15%. But anyway, $86.07 in the pre-market. So we're up here. So this looks like it could have made the turn here, right? 86.07. Oh, you know what? I think you took down the I forget my name. I thought I put in something else for my name. It was a Joe Biden quote. It said, "I may be Irish, but I'm not stupid."
Oh yeah. I took that down this morning. I'm sorry because when I changed mine, but then it did for me when I came in. I'm sorry.
Well, that was one of his brilliant quotes, which I completely forgot about. All right. Anyway, yeah. So it looks like the bonds have kind of made the turn here. See, so this is where we're trading in the pre-market. So this is bullish for the market. The market's kind of really been focused on interest rates, and I've been a little bit surprised at how strong the market's been. But if we read the signals and kind of not have an opinion and are kind of agnostic, right? Forget about the news. Forget about Ukraine. Forget about Israel. Just like from a financial point of view, and just look at the market and the fact that those interest rates are starting to come down.
Real question: did anybody have any problems getting into the options course yesterday? If you're here, give me a 1 for yes and 2 for no.
Yeah, and let us know if you guys liked it or not.
And if you need anything else added to it, or if you see that we're missing anything, because basically what happened is Mark's taken a bunch of free information that's available on the internet and put it all together and just gave explanations for you. So it's got a little bit better of a way to stick in your mind. So it did work, Avi? Good.
Okay, cool. Yeah, so you notice these kind of lower highs here. So, all right. So now, like I said, if say you were on a desert island and you didn't know any of the news, but you had access to your charts and you were just kind of looking at this, well, you can see we've kind of been trending lower. This is our descending triangle type pattern here. So it shouldn't be. So if you were just watching that, you wouldn't be surprised that the market is rallying. But if you get caught up in all the noise of the news, it just kind of makes you confused. So we kind of stalled out at this resistance, this resistance for like 2 minutes, but then we like blew right through it. So this morning we're trading up here. So I think a big part of whether this will continue is going to come out of what's going on over in our financial sector. And this, yeah, I mean, I think it's pretty safe to say now that this 3240 level has been broken. So, you could have some pretty decent upside here. We'll look at our tech sector. Trading up here this morning. So we could have, yeah, I mean, look at that. These are strong moves. I mean, these things just blew right through. We talk about action and the things you can't quantify. So notice how there was clear resistance there, but we just blew right through it. And looks like we're going to continue here. So there should be some, it looks like there's going to be some follow through here and there's some room to move there, at least up to there. So this morning we're trading there. Now, healthcare, remember, had found that bottom. So my suspicion it's probably reversing off of it. So this looks kind of bullish too, right? I mean, we sell off, and as we know, we tend to find support at levels that were support before, and that's because you have people that sold back here that regret their decision to sell when the price moves higher, and they tell themselves, gee, if I could buy my shares back at the same price I sold them at, I'm going to. So we get back down to what was support. You got enough remorseful sellers placing buy orders, and support can form at the level that was support. So you can see the same thing happen here. If you look at this chart, it's obvious. Some price levels just happen to be important and some price levels just aren't. It's just how it is. So tech looks good. Financials look good. Healthcare looks good. Interest rates look like they're coming in. This all sets up the stage for a decent move higher. Now I'm not talking about where the market's going to be in 2 years. I'm talking about where it's going to be maybe in a week or two, because basically just by the nature of what we do, it's kind of short term.
Right.
This looks like is kind of running into resistance here, the consumer discretionary sector. But over the last couple of months, this hasn't really been the driver of the market like the way tech and financials have. So it can be sometimes. All right.
Mark, when you get done with the sectors, I'll be asking you to look at TMF and then Jets.
Jets?
Yeah.
Okay. See that Jets Giants game on Sunday? It's got to be like the ugliest game I've ever seen, but it was like the only exciting game all weekend.
No, I didn't. I was recovering from the trip back from the Dolphins game.
Dude, it was I think it was the most punts in the history of the NFL. There was like 15 or 18 punts. The Giants lost their 2 quarterbacks, so they had their third string guy starting. The Jets, I think, lost their first 2 centers, so they had their like the guy activated from the practice squad playing. It was just, and it ended up going to overtime. It was like the ugliest game ever, but it was exciting.
Wow.
All right, so
here's a defensive struggle or a bad offensive performance.
Oh, it was just garbage, dude. It was just garbage everywhere. It was, and the New York crowd is so funny because everyone just boos. All right, so industrials look like they're doing okay here, right? I mean, maybe at a little bit of short-term resistance here. So, I mean, things have short change, right? Like a week ago, everything looked kind of bearish. Now we're seeing a lot of bullishness. Here's our consumer staples. It's another example of a perfect price level. See, we sell off, and where do we find support? Right back here. And then I'll just take a quick look at the ones that we usually don't look at, but we should. We just don't, because they don't really drive the market, like utility sector. Now, this sold off because interest rates were going lower. This here to me looks like it's set up for now a potential move higher, because if interest rates go lower, these will go higher, because the bond market and the utility stocks are kind of like competition. People buy utilities because they want the income. If interest rates are moving higher in the bond market, people sell their utility stocks and buy bonds. Vice versa. Now that rates are moving lower, money could be coming into here. And this is a bullish pattern here. This is our old ascending triangle pattern. And it shows that we got sellers who are content to hang out, but buyers are getting more aggressive. In other words, the sellers are okay with hanging out around this level, but the buyers like, I want to be able to, I want to go get, buy some stuff in here or whatever. So now what we could do is we can look into stocks in the utility sector. I mean, the utility sector seems to be boring, but this thing looks like it'd be poised to move. If you were on the short side of this, you wouldn't have been bored. You know what I mean?
No.
And probably a similar kind of picture in the real estate stocks, because they're another thing people buy for income. But that utility sector looks pretty compelling. So when we're done, I'm going to go through it, and then I'm going to look for some ideas. I'm going to post that on our on the blog on our website.
Excellent.
And there's materials found that support around. So anyway, all right. So what's the question on TMF?
Yeah, TMF leveraged 3 times, and then he would like you to look at Jets as well.
Well, I mean, TMF, yeah, I think this thing is probably set up for a decent move higher. So this is just the, if we look at TLT, this is an ETF that tracks the bonds. Now it can't do it perfectly because it's a basket. So that's why it says 20 plus. So there's probably 20 years in there, 30 years in there. But this is a good, I guess, proxy. I'm hearing that word a lot lately. So you can see the charts are pretty darn similar. But now this is leveraged. So if TLT goes up 1%, this is going to go up by approximately 3 times. Not perfectly, but approximately 3 times. So yeah, if you're really aggressive on bonds, really bullish on bonds, this would be something to consider. And frankly, just based on what I'm seeing in the interest rate, there's, I don't give recommendations, but I would be comfortable having a position in this. But remember, this is based off of this. So if you're looking for potential target, look for it over here. Because that's leveraged, just by the nature of the way the charts are constructed, it's going to be more volatile and harder to read. So I would say, from a trading point of view, we got this fast move down. I think there's a good chance we could get up to there. So if I bought TMF, I would be watching this. Oh, TLT is getting close to 88. That would be my sell target. And it's just the way they're constructed. I mean, just think about it. Because this is leveraged, it's going to be. I mean, I suppose if it works for you, you could do it. But I'm just kind of giving my thoughts on it. If something is based on something else, and that first thing is leveraged, just by definition, the moves are going to be bigger. So it may be, it may make more sense. Like if you're trading one of these energy ETFs, like just say, United States Oil Fund, I would not use this chart. I would be looking at oil, because the oil market's much bigger. It's gonna be much easier to get. Well, look at that. So oil looks like it's finally starting to break down. Again, another surprise. Who would have thought with all the stuff that's going on? But the charts are never wrong. And here's our descending triangle pattern. And we had a feeling this was going to break one way or the other. So we've been talking about it in class, like maybe straddle or strangle. But anyway, the oil market never closes, whereas like something like this only trades from 9:30 to 4. So I just think you get more accurate signals watching this. So you watch this, and if you're not an oil trader, you place your trades in USO. Oh, break and support. Oh, it's time for me to buy puts on USO. It's like you don't even really need to look at the USO chart in a lot of ways.
Yeah. And then Jets was the other one.
So U.S. Global Jets.
Mm-hmm.
Oh, look at that.
Mm.
Hopefully you saw this.
No, I wish I'd seen that back in July.
Now you see that.
Yeah.
So we're right at support. So I guess we got to look at some of our. I mean, some of these like the airlines and the cruise lines are really just getting hit hard. Probably just indicates that there are bad things to come. I mean, hopefully we're not talking about things that are real bad, but
I still don't see how the economy hasn't slowed down.
well, my stepfather owns a garbage business, and nothing is a better indicator of how the economy is doing than garbage. And I'm not even saying that to be funny.
Yeah.
I one time I met a guy who was this AI guy, and he was trying to put together this stuff with satellites where they would like just be able to see like the activity at the dump, I guess the transfer station. So he's he's got a really good sense of the economy, and he's just like, he's like, things suck out there, like he doesn't get, I mean, think about it, like if the economy slows down, like what's say you lose your job, what's one of the first things you would do? Well, like in my town, you could just drive your garbage into the dump if you're a resident, right? But people don't do that. They pay a garbage man to come to their house. Oh, that reminds me, I got to pay our garbage man so they come today. I think we pay $270 for 3 months. But if you lose your job and you're hard up for money, it's like, well, gee, I could just drive over to the dump once a week, And then there's all the things people don't forget about. Like you got diesel fuel, but oil goes into the tires. I mean, it goes into everything. And when he's got those big, heavy garbage trucks, those things got to get their tires replaced like every 6 months.
Well, the taxes on those are expensive too.
I think he said it's $700 a tire. So that's every 6 months. You got to spend like $3,000 on. Actually, no, because the trucks have, at the bare minimum, 6 wheels. So yeah. All right. Well, anyway, so here's the thing to think about on this. If you're playing for a potential reversal, now it's oversold and it's at support, and we know that things that are oversold that get to support have a tendency to bounce, but we don't want to catch the fallen knife, right? Just because it's oversold and it's going lower doesn't mean it can't go lower anymore. So what would I personally look at for a potential reversal here? It's trading at 1503, and we know 15 is a nice round level. I would probably just to give myself a little bit of room. I would say my entry point here would be around 1530. And he really sees the wage inflation too, because he uses a lot of the immigrant laborers.
Yeah.
And I think he said now it's $250 a day cash, and you got to buy them lunch. I was like, damn, man.
Damn.
It's like maybe
That's good money, man.
Maybe I'll become a garbage man
That's
again.
$1,250 a week to be a day laborer.
Yeah, so think about that. So what's that pre-tax?
That's $30 an hour. That's $31 an hour.
Yeah, so that's cash, and so that's like, I don't know, $2,000 a week, pre-tax.
Yeah.
So we're talking about a 6-figure job for riding around on the back of a garbage truck
and being a day laborer. Wow, man, I've just wasted my life then trying so hard.
Oh man. Trigger for long. I think the trigger has been set, Abby. For if you're talking about so for this, my trigger to jump in would probably be up around here. I would say if we get above, like, say 1530, that's where I would get in. So here's the thing about having these triggers and waiting for the reversals. it's just because something is down and oversold doesn't mean it can't keep going any lower. So I think
Right.
if you wait for something to reverse and jump in, I mean, all right, we all know that hindsight's 2020, but I mean, you could have set up here. This actually level looks pretty kind of clear. It's 2180. See, it was the open, the close, important there. So if we saw this reversal, I would have said, all right, well, I'll wait till we pass this. So we would have gotten in at 2157 instead of just trying to call the top. But no one can call the top. No one can call the bottom. So you're better off just kind of forgetting about that. No, it's just I think the analogy of a basketball game is a good one. It's like, you're not going to hit all your shots, right? The only thing that really matters is who's got more points on the board at the end of the game. Bullet manufacturing might be a good investment. Yeah, I heard we're running pretty low on bullets, man. I don't even know. Affected by oil trigger. I don't know. I would look at the bond market now and the oil market as two different things. I don't think there's going to be much. I don't think they're going to influence each other, at least in the kind of the short term. So I don't think I would think about it that way. But some of these, let's see, like Carnival Cruise Lines. This thing broke support. I mean, it looks to me like this thing can keep trending lower. I don't really see any obvious support in here. American Airlines. Oh, this is an interesting one. Look at that. Oh, actually, this is below. Oh, no, look at that. It's that long-term support.
Wow.
So actually, this is one of the things we talked about in class about potentially getting into this if this trend line breaks.
And that looks exactly like the Jets chart.
Yeah.
I mean, that may be the one that was driving the Jets chart.
Yeah, like we could go look at so if we look at JETS and then ETF, oh sorry, fact sheet. All right, so this is that ETF we just looked at. Yeah, not surprisingly, American Airlines is the biggest company in it because they're the biggest airline. So you could see, oh, look at this. Like there's some stuff, well, I was going to say there's some things I've never even heard of. Hawaiian Holdings, HA. Let's see what that looks like. Now, these are probably all going to look pretty similar. But, here's the thing to think of too, right? If you're thinking about, all right, I like, I follow this ETF Jets, and it looks to me like it's going to reverse. And I'm going to just kind of, let's just say you're going to use the strategy of, all right, if we get back above this red line, I'm going to jump in. Well, you could go through the companies that are in the ETF and see if things are look like they're going to jump more. Amadeus. Well, I guess that trades. I don't even know what flag that is. But all right, well, Boeing is a little, that's not really and doesn't trade like regular airline stocks. But all right, so we can look at American Airlines. So the idea is this: we see this sector, we think a sector is going to turn. So what we're going to do is look for the stock that looks like it's going to turn the most or reverse the most. In other words, say we're right and the sector reverses. Well, Jets might go up by, say, 2%. There might be a couple stocks that are going to go up by, say, 5%. And then there are going to be stocks that go up by less because Jets is just the aggregate, just the average of the sector. So now we find two stocks that look really primed for reversal. They're like more oversold than any other stocks are in this little sector or industry here. And one of them has resistance 3% above it, and the other one has resistance 6% above it. Well, there's a good chance that the one that the one that has 6% to go is going to move more than the one that has resistance above it by 3%. So what would you do? You would put your money into the one that looks like it's going to move more. It has to do with the most efficient allocation of capital. All right, so that's that. So we could look at Delta. And these are all going to look pretty similar. I mean, so look at Delta, it's like right there. So if I look at Delta, I don't really see anything that really kind of sticks out like it would be any kind of meaningful resistance. Let's see if I can say the same thing about American Airlines. Yeah, I mean, kind of the same thing with American Airlines. So this is a lower price stock. So it might move more as a percentage just because the way people think. All right, so next up would be Love Airlines.
Well, it almost didn't even change.
I mean, these all look kind of pretty darn similar, frankly.
Yeah.
Let's see. Love Airlines, SkyWest. Oh, look at this one. This looks very different than the other guys. I wonder why. But seeing that this one is already all right, so now seeing that this one is already up and it's at resistance, so this one probably, if Jets does reverse and head up, this probably won't have that much upside because it's sitting right below resistance.
Right.
Sun City Airlines. Sun Century Airlines, SNCY. Oh, Sun Country Airlines.
Never even heard of that.
I never have either. So it's a small company. But now here's something where I could see, all right, if I was starting to think about potential moves, that's probably a pretty, $14. So I could calculate, all right, if this reversal happens short term, this thing can move by about, 8.5%. I mean, that's a pretty nice return.
Yeah.
So if Sky reverses by 2%, this thing could move by 5 or 6%. So it's a matter of looking for the best bang for your buck, or the best place to deploy your capital. And in the institutional world, if you think about it, say you're right about an idea, right? You think airlines are about to rally. Well, there are people like risk managers or maybe even the traders that are going to try to figure out, okay, if we're right, where's the best place to have our money? Should it be in this stock? Should it be in that stock? Let's look at the options. Like, which options are cheaper? Are the SkyWest options cheaper than Alaska Air? You just want to be, if you're right about something, there's so many different ways to play it. Say you think, all right, S&P is going to be up 5%, and S&P goes up 5%. Well, you could have been in a leveraged ETF. You could have maybe bought a tech stock that would move more than the S&P 500. So I don't want you to get too hung up on it, because you could spend basically the rest of your life thinking about it. But it's just something to think about.
So, Mark, when you go to trade for a firm and you're sitting there, do they actually have like a list of how you should trade this? Or do you have like older traders that say, hey, why aren't you using this leveraged ETF to trade that stock that you're trading right now? I mean, you have to maximize your profits, correct? When you're trading for those firms?
Well, I mean, it depends on the strategy. It depends on the strategy. That would be really the portfolio manager's decision.
Okay, so they basically tell you what to trade.
In your traditional role, your traditional investment management world, the portfolio manager is the person who decides what's going to be in the portfolio. Like, the portfolio manager might decide, you know what, I want to buy Delta Airlines. Okay. They're the person that runs the portfolio. They manage the portfolio. That's where the name comes from. So
Gotcha.
they might come out and they might say, or they might say to me, like, hey, Mark, listen, I'm interested in buying a airlines. Which one do you think looks the best? So then it would be my job to kind of go through these and say, you know, if you're right about your airline call here, I think that your best bet is probably going to be American Airlines or Delta Airlines. Or if the guy says, "Hey, you know what? My heart is set on buying Delta Airlines. I spoke to the management. I'm really confident in them." What would you think would be a good place to get in? Because as long as we're continuing to trend lower, there's really no need to go and buy it,
Right.
right? You know, I mean, if you're patient, you're going to get a better price.
Right.
So I might talk to the portfolio manager and say something like this. All right, look, dude, you know, here's what I'm thinking. I'm thinking that there's a good chance there's going to be resistance around, say, let's say 3180, and we're pretty close. So I would probably wait until we got above that. But now keep in mind, the institutional world is different than the retail world because I could get on the phone and I could call my traders over at Goldman Sachs or Morgan Stanley or wherever BTIG and just be like, dude, what are you seeing over? What are you seeing on Delta? And if the guy's got if I have a good relationship with the person, they might say, listen, we're better to buy, or we still got a couple of big sellers on our desk, you know,
Gotcha.
and that's where the relationship comes in, and that's why I was able to do a good job because I could get along with people, right?
Life is about relationships, man. It really is.
Yeah, so I could call my guy and just pick a firm, XYZ firm. Now, the guy could just be really eager to get my trade because he's ultimately going to get paid a commission on it. So I could call the guy up and say, hey, listen, do you think it's time to buy Delta Airline? And the guy could be like, yeah, totally, dude. It's time, And maybe he's just saying that because, his wife wants a new pool and he wants the commissions, right?
Right.
Or I could call the guy up and be like, what are you doing on Delta? And he might say, a guy I have a really good relationship with, Mark, and he wouldn't like advertise this to people because he wouldn't want other people at the firm to know he's protecting me because they want the trade. Mark, listen, we got two big sellers here on the desk. One leaves 200,000, one leaves 400,000. And I would say, all right, I'll buy on a cleanup. Right. So in other words, I'll buy 50,000 shares on a cleanup. In other words, when those two big orders are down to just 50,000 shares, that's when I'll buy. Because I don't want to buy the first shares they're selling. I want to buy the last shares that they're selling, right? Because the first shares might push the price down. Or the guy might say to me, listen, we got 5 buyers on the desk here, dude. You better get active. And if you got a really good relationship, they might even say, hey, listen, go somewhere else. You're going to be splitting prints with 5 other guys.
Sweet.
And it's a two-way street. I mean, I could hurt them and they could hurt me. So develop this like relationship because, it's my job to protect. This is the thing. It's in that style of trading. It's not a chess game. It's like a poker game. Sometimes you show your hand. Sometimes you don't show your hand.
Right.
Some people are sleaze bags. Like I used to trade with these guys that were total sleaze bags, but I had to because they were friends with the person who took over my firm. And there was all kinds of kickbacks going on. This guy was like, oh, trade with this guy. And then I find out like, oh, he took his family on vacation. Their families went on vacation together. It's like, oh, gee, who do you think picked up the bill?
Yep.
Which is highly illegal, but
and unethical. I think people should look more at ethics than they do at illegal. And I mean, trust me.
Well, that's why these guys destroyed the firm. This firm I work for was in business for 30 years, and it was called Thompson, Horseman, and Bryant. And Thompson and Horseman were long gone by the time I ever got there. But, Bryant was this older guy and he was just a great guy and had a lot of integrity and he was really smart. And he went to retire because he's in his 70s worth, how many hundreds of millions of dollars. And, so these two young partners, like they try to like push him out and they ended up taking the place over and they just destroyed the place. And the problem is they ran the firm for themselves. They didn't really run it for the clients. there's two types of business owners, right? There's one runs the business for their clients, and those are the ones who get successful. And the other ones run the business for themselves, and those are the people that have short-term success, but inevitably end up blowing up.
Yeah, there's no longevity because they don't build relationships.
Yeah, and you get a lot of like this narcissism, and you know, you know, I suppose it happens in other industries. But Wall Street's the only place I've ever really been. But you just get these big egos, and I don't know. It's not like retail traders tend to think that like everyone who's worked at a hedge fund ever in the history of their life is like smart. But trust me, I've met plenty of hedge fund traders that were freaking idiots. So all right. Anyway, all right. No one's got any more questions. I think I'm gonna hit the road. But just remember, it's all about interest rates today. Let's see where we are now.
Guys, have a wonderful day. And if you haven't checked it out, we've got the link on Twitter and we've emailed it out to everybody. Check out the options course and just give us a little bit of feedback. Let us know if we're going in the right direction for you or if we're completely sinking. Thank you so much.
Look what's going on in rates here.
Yep.
Huge move.
Wow.
Yeah. All right.
All right, everyone.
We'll see you all tomorrow.
Enjoy the bullish market, guys.